All right, we're back. Brandon Rhymes here, Consumer Quarterback Show. Mark Haye in the house, 21st Century Financial Group. We're going to talk about mid-sized banks and some of the things that the government can do to help protect us as consumers. We're going to talk about that. I'm going to jump into that here in just a moment. Before we do, a couple of hot listings here from the Platinum MVP team at Keller Williams Realty, featuring our listings live on air. 3704 Burger Road in Lutz. We got a mansion for sale. This is a beautiful property. We've got 10,000 square feet, 10 bedrooms, 12 baths, no HOA or CDD. You also have an indoor pool area with a full bar and an oversized deck, full tennis court, movie theater, library, sauna, 2 master suites, grand balcony, and more. 3704 Burger Road, Lutz, Florida. Over an acre of land, just recently reduced as well. Owner is motivated on that property. We have another listing here at 13906 Bardmore Place, Unit B. Just did a price drop on this one as well. Made a price improvement on it to get some action on this one. 3 bedrooms, 2.5 bath, 1-car garage, almost 2,100 square feet of living space. Looks like a complete remodel as well. Beautiful kitchen, lighter colors, beautiful backsplash there with a nice design and tile flooring. Second floor features water-resistant parquet flooring as well. 5-person jacuzzi tub as well. 13906 Bardmore Place, Unit B, Tampa, Florida. It's in Carrollwood. Beautiful townhome in Carrollwood. You can see all of our real estate listings. PlatinumCoastalElite.com.
Sun is shining, the weather is sweet.
All right, we got Mark Haye back in studio. Welcome back, sir.
How are you doing, sir? Good to see you.
Excellent. Blessed and highly favored. You happen to see that Sound of Freedom movie yet?
I have not seen it yet,
It's a
actually.
good one, man.
I have not seen it. I need to sit down and watch that.
Yeah.
It's good?
Yeah, it's in the theaters, you know.
Yeah.
And it's a really good expose on kind of this the scum of the earth, you know, people that do this trafficking of children.
Oh, man, it's so sickening, and it's really gone out of hand since, you know, this administration just let the border be.
Yep, wide open border.
Unfortunately, that's one of the major things that happened is the child sex trafficking, the drugs, the fentanyl.
Right.
And that's why it's important to have border security. We can do it for everybody else, like Ukraine, but we can't do it for ourselves.
Yeah.
And then here we are with the child trafficking, and, man, it's just so sad. I hate seeing it.
You know, and you think about it, too, with the CCP. I mean, they're running people through there. So not only did they do biological warfare on us with this Wuhan lab, but also fentanyl. You got chemical warfare coming on. So they're sending a lot of fentanyl through. But anyhow, yeah, you know, kind of I could go on a bunny trail there for a while.
Absolutely.
Sound of Freedom. Go check it out if you haven't seen it, folks. All the good people are doing it. All right, Mark Haye, 21st Century Financial Group. What are you seeing out there, man? It's, you know, the market is, it's a challenging time for people. We got inflation, you got stagflation creeping in, and just a challenging time for people. And you look at, you know, the investment side and taxes. I mean, there's one thing for sure, that taxes are going to continue to rise.
Right, and that's what we kind of talk about. And I was going to go through Market Watch did a study on just what we're talking about, retirement, retirees, and where we're at as far as a landscape. But you're right. If your government is $31 trillion in debt, and that's not including the Medicare, Medicaid, and Social Security. If you added all those together, the liabilities we have, that's $200 trillion right there, just in those three things in our debt.
Wow.
You know, so if you're in business with a partner that's $200 trillion in debt, you know, do you think taxes are going to go up or down 20, 30 years from now? And everybody's going to obviously agree that taxes have to go up. So that's why we always tell people it's a lot. You got to meet with a financial advisor. You got to meet with somebody. Just throwing money into a 401k doesn't work anymore. There's too much happening. And so Market Watch did a study about retirement, retirees, where they're at, how they feel, and crazy statistics. But one statistic is 28% of all Americans right now have zero saved for retirement, not $1 saved. That's
Wow.
1/3 of all Americans right now don't have a dollar saved. And then they went through kind of each year's, and they asked, you know, if your retirement's on track. And 30% said their retirement's on track as of this year, which is a decline from last year was over 40. Year before was 38, so it's going down as far as retirement planning and people feeling comfortable. What's really crazy is 40% of employees, workers, etc., have taken a hardship or withdrawal from the retirement accounts, whether it's IRA or 401k, etc., incurring the taxes, incurring the penalty, just to make ends meet right now. Mm-hmm. Now, not to say that there's nothing wrong with it. I mean, things happen. The worst thing to do is to take from a retirement account, and we meet with clients to do this. Difference between a hardship and a loan is a big difference. If you just took out a withdrawal from a qualified plan, your IRA or 401k, you're going to pay taxes and penalty for 159.5. Like you and I would pay taxes and penalty 10%. But if you took a loan out, you would pay yourself back with interest. Most people don't realize that. They hear loan, oh, I don't want to take a loan, I'm just going to take a withdrawal. Well, you just pay yourself back with interest, and it's like 4% or 5%. And so we help people. You come into hardship and say, look, we this happened, or I lost my job, or inflation's happening. Okay, the worst case scenario is to take it from the retirement, but if we just loan it, at least we can put it back in with interest instead of withdrawing the money. So that's why it's so important to do that. And I don't want people to have to live within their means or be a miser just to save for retirement. I certainly don't want that. But people need to start cutting, and we talk about the government's got to do the same thing. They just don't want to do it.
No.
But you do have to cut out the fat. It is what it is. One of the biggest things to get financially secure or get to wealth, and I tell people all the time, you can certainly save for 20, 30 years, have compounding interest take over, and hopefully have a bucket of money in retirement. But if you really want to be wealthy, you got to have a business. You got to have a business. You got to take your expenses and turn them into deductions. And we talk about it all the time. You got to take your income and keep as much as you can. And the problem is people are tipping the IRS all the time. And I think it was like $12,000 on average a year it goes to the IRS per household, of overpayment.
Right, overpayment.
And that's just people that are not able to take deductions instead of expenses, or they don't know deductions. We've talked about the Augusta rule. We talk about paying your kids. We talk about different things here that we certainly talk with the clients. But you got to have a business and reclassify the income, take deductions when it would have been an expense as a W-2. And then people say to me, well, what business? Like, what would I do? You don't have to do anything crazy. Do you like to shop? And every wife in the whole world says, I love to shop. Okay, why don't you just resell clothes you're never wearing? Your closet is huge,
you go.
And you probably wear 25% of the clothes. So one business idea would be Michelle's Clothing Resale, LLC, and start selling your old clothes. Then you're going to find new clothes. You're going to go shopping, and this is a deal, and turn around and sell it.
Yeah.
Then you got your two kids helping in the business and taking photographs, and now we're going to pay them $12,900 a year tax-free. And we're going to Augusta rule the house. But you can see how it snowballs fast.
Yeah.
If you just do something simple like that. And we help clients set all that up. Now, all of a sudden, the expenses that you were paying are now deductions. Now you're keeping more money. And guess what you can do with more money? We can save more money. We can put more money away for retirement, college planning. We can not have a situation where we don't have emergency funds. You got to have emergency funds.
Right.
You can't just go out there and live paycheck to paycheck. I just hope this gets better. No, be proactive.
Yeah, because that's the fastest way to bankruptcy.
100%.
If you don't have most bankruptcies come from those lack of reserves, right? Emergency comes up, whoops, car broke down, whatever it might be, and a lot of it is divorces as well, sadly. But yeah, I mean that's a great idea. I mean if you're W-2'd, start a second job selling secondhand clothing or whatever it might be.
A business, not a job. Open a business.
Yeah, exactly.
And
start a
business. Could be anything. Google small business ideas, and they're going to have just a plethora of ideas for you. A lemonade stand. It doesn't matter. Just anything that you like. Just create that. Now all of a sudden the kids can be in the business. We could pay them tax-free. We can Augusta rule my house 14 days. All of a sudden you're taking income and reclassifying it, making it tax-free, taking all these expenses that you were paying into deductions, and all of a sudden now the money is it's fast-forwarding fast. And now all of a sudden you're going to be financially secure 7-10 years from now just doing that.
I brought this article, Mark. I wanted to have you comment on it. So Mark Haye, 21st Century Financial Group here on the Consumer Quarterback Show. I'm your host, Brandon Rhymes. And this article says Fed eyes mid-sized banks capital. So it may be even mid-sized banks are too big to fail. Michael Barr, Vice President for Supervision at the Federal Reserve, announced that he is working on a proposal to increase capital requirements for banks with assets of $100 billion to $700 billion. It's a category that includes about 30 U.S. banks and would have encompassed SV Bank, Silicon Valley Bank, First Republic Bank, and Signature Bank at the time each lender collapsed earlier this year. Events that, according to Barr, showed that even banks of this size, can cause stress that spreads to other institutions and threatens financial stability. Now, critics say consumers would bear costs of higher capital reserves in the form of increased borrowing, fees, and decreased lending. What's your take?
Yep. I mean, there's a lot to cover right there. I'm not a big fan of banks. I really believe that you should have your reserves in there, maybe 6 months of emergency fund. The rest of it should be somewhere else. Mutual life insurance companies. I'm going to set up an investment account. I'm going to do whatever. But the reason I don't like banks is, just to give it a simplistic example, is let's say they pay you 1% on your checking and savings account, and they go off and lend your money for 2%. Okay, their markup, they made 100% on that. Okay, just lending out at 2%. And then if you want to go buy a house, they make you pay the appraisal. We're going to put a PMI on this. You got to put 20% down. So they're protecting their asset, meaning they're protecting their money. They're not just going to give you the money. Okay. If something happens, like what happened with the bank, and they go under, or the mortgage crisis, whatever else, now all of a sudden you got to pay taxes to bail that bank out, who just took 100% return on your money to lend that out, and then they mess that up. And I don't like that system.
Yeah.
Because they're not playing by the same rules you and I have to play by.
Yeah.
And not to mention, I tell you all the time, be your own banker. We can show you how to do this. You know, the banks do the same thing that we tell you to do. Put 30, 40% in cash value, and now all of a sudden you can loan it out and still make an interest on that money as if you never touched it. Banks do it all the time. That's how they make 400, 800% on their money, not taking a risk.
Yeah,
you know?
hard money lenders do it too.
Correct. And they can say whatever they want. Okay, these banks need to have a higher reserve. Go ahead. But the FDIC should raise their reserve. You know, if you got 10 trillion plus of monies in the bank, but you only have 30 billion with a B to back it, that's the FDIC.
Yeah.
That's not enough reserves.
Right.
The math is not adding up. So
Exactly.
they can go after the banks all they want. But the bottom line is the government, who supposedly is backing the banks, doesn't even have a penny for every dollar that's in there. And then, so we're going to go and put more strains on the banks,
Right.
which are the small banks. Well, to me, it feels like they're trying to destroy the small banks and make it into just 5, 6 large banks.
Exactly. Yeah, they love consolidation because now they can
100%.
control them more. Plus, we haven't even got into the whole talk about the digital currencies. These world reserves are all putting together these digital currencies. Did you see the clip of the World Economic Forum jerk up there talking about, oh yeah, we should implement this on a worldwide scale because you can have ratios. So in other words, they're basically admitting like, oh, we'll tune down, let's just say a MAGA conservative, we're going to tune down his ratios. They're also saying that you can control, he goes right into it, he says we can control what they purchase, ammunition, etc., right? So you don't even fill in the blank there, fuel for your pickup trucks because you're not driving an EV, whatever, however you want that to go, or the truckers, like happened in Canada last time, Mark.
Yeah, and you know, I'll just hit on what you said. I'm going to put diesel in my truck, okay, and that costs X amount of dollars, and the government is only going to allow you to have X amount of gallons per month.
Yeah.
You know, that you could say that's a conspiracy theorism, but how is that not just like, you know what, that does make sense. I mean, if they're pushing for electric, why would they not come through with digital currency and just punish those that don't have electric?
Yeah.
You know, and if you say, okay, if we got these 30, 50 small banks and we can raise their reserves, which is going to basically put some of them out of business because they can't get to those reserves.
Right.
Then you're just falling into the big five.
Yeah.
And all of a sudden it's all about control.
Yep.
So if the government wants to come through and say, yeah, we got to put more reserves, which I'm all for it. You know, let's have more reserves. So should the government.
Yeah.
Because I'm sick and tired of things happening like the Silicon Valley Bank, and they got to get bailed out. Okay, so then we're just going to print money and then tax the American people to go around and bail them out.
Sick and tired of it.
Right, when they're the ones that were lending the money out for 400 times what they're giving you. You're backing it with PMI, and you pay the appraisals, and you do this. And that's why when people are putting extra money into their mortgage to pay their mortgage off, I'm like, for what?
Yeah.
So you can go back to the bank and say, can I borrow the money at your rate? And then go through that application process, and hopefully they give you the loan, and then you have that loan at 7%, and you're other. Don't do that.
Yeah.
Like, don't do that. We can show you a way to pay off your mortgage a lot faster than doing that and keep your money.
I like what happened to Bud Light. They fell to number 14, the latest I saw as far as popular brands. So, you know, I like the go woke, go broke philosophy around here. So hopefully, you know, we can keep that going.
Yeah, I saw that, and I saw Target. You know, they're kind of correcting themselves. I think Bud Light is going to come back just because it is. It's
Well,
a beer.
Anheuser-Busch is so big, too.
And
They own
football
Stella,
season kicks off, and it is what it is. They'll come back.
Corona Light,
Right.
Stella,
But hopefully they
Artois,
learned. I mean, we don't
Yeah.
want to hear your political views. We don't
Exactly.
care. Just
Yep.
give us a good product. We want to have a good time with our friends or family and sporting events. We don't really want to know about these political views. We want to get away from it.
Exactly.
You know, so that's why when the sports do it and these big companies do it, it's just kind of a turnoff. Like everywhere we go, we have to be bombarded with political views.
Well, I want to ask you about Sequoia Capital and some of these other big investment groups when we come back. I want to take a quick break. I'm going to play a clip from one of the podcasts I listen to frequently, and it's about a Wall Street Journal article, investigations, and the Sequoia Capital. And basically what they're doing is they're funding the CCP through pension plans, through pension funds. So we're talking with Mark Haye, 21st Century Financial Group here on the Consumer Quarterback Show. I'm going to ask him about that effect and how the question is, are we funding our demise as Americans through pension plans that are placating and enriching the CCP? Let's answer that question when we come back here on the Consumer Quarterback Show, consumerqb.com.
Hey, everybody, it's the Captain, Matt Bruce, and you're listening to my buddy, Brandon Rhymes, a Consumer Quarterback. Sell, Brandon, sell.
All right, Brandon Rhymes here, Consumer Quarterback Show, Platinum MVP team, Keller Williams Realty. Mark Haye in studio. Number one book on Amazon right now in his category, new released book called 0%. We're going to talk with him about that here in just a moment. Before we do, a couple of hot listings here. 7202 US Highway 301 South in Riverview, Florida. This is a great opportunity to own a commercial lot. You got a corner lot location here in Riverview, Florida, Hillsborough County. Lots of vehicles passing by a day. I think the count is around 50,000 vehicles per day. You've got a muffler shop, mechanic shop there, and a building and office space that is available. Newer roof AC system in the barber shop there. 7202 US Highway 301 South in Riverview. So we sell commercial properties, vacant land, and, of course, residential properties here on the Consumer Quarterback Show and the Platinum MVP team. 15900 Oakcrest Circle in Brooksville, another one of our properties that we've got in, what I love about this area, too, is you got larger lots, oversized rooms, 4 bedrooms, 2 bath, 3-car garage, 15900 Oakcrest Circle in Brooksville, Florida, one of our hot listings from the Platinum MVP team. You can see all of our listings online, platinumcoastalelite.com.
Somewhere sunny and 75.
All right, before the break, I teased this clip here about the Wall Street Journal article and the connection to some of these pension funds, Mark. I want to talk about how these pension funds are using ESG to funnel monies through those systems to the CCP.
This is why these investigations of Sequoia Capital, the investigations of really going after Merrick Garland for impeachment and going after Merrick Garland because of the laptop from hell, and why and Bill Barr to be brought back. There will be criminal charges against all these people. Your nation is being sold out every day. The Chinese Communist Party is both at chemical warfare and biological warfare against the United States. The Wuhan lab, the virus that came out of Wuhan that nobody wants to talk about. The biological weapon lab at Wuhan and the biological weapon that came out and essentially destroyed the American economy and the world economy.
So
and the chemical warfare is fentanyl.
The nation's being sold out by, and a lot of people, they don't know that their pension dollars that they're, and I do want to get to a review. I want to make sure we offer people a review. But what's your take on that, Mark?
Well, the thing about it is pensions in America are so grossly underfunded. I think it's close to like $8 or $9 trillion is the unfunded liability of pensions. And just in California, I think it's over $100,000 per household owes in unfunded pensions.
Wow.
Okay. Then you say, okay, these government agencies are going to take the money that is allocated for pensions. We're going to invest it. And like you said, we're going to put it in what we think is going to be correct. And we saw how well it turned out with the who's the guy that went $8 billion under, the coin guy.
Yeah. Sam Bankman-Fried.
There you go. I mean, it slipped my mind there, thanks. But yeah, so you use stuff like that, and all of a sudden you lose $8 billion in a pension fund or whatever money was in there. You're making terrible investments.
Yeah.
Just because you believe something doesn't mean that's a correct investment to make.
Right.
Especially as something that's guaranteed, like a pension fund. You're not going to want to go and risk too much.
Exactly.
When you have a little bit of money and all these liabilities, and that's why we keep talking about it's so important. Most people don't have pensions anymore.
Yep.
But if you do have a pension and you live in a state like Jersey, Illinois, California, I'd be worried. I'd be worried. I would plan ahead and say, what do we got to do? Because I don't see how they're going to keep giving out this kind of money without having it funded or being poor investments, etc. And it's a shame, because all those people have relied on the pension to be their retirement.
Yeah.
We don't have, you and I don't have a pension, but there's people that are older, baby boomers, that have the the ability to have that pension, and God bless them. But man, if the government can't pay it, now what?
Yeah, it's an aging demographic, that's for sure. You see an aging demographic out there. So if you want to get a second look on your retirement plan, your portfolio, your pension, anything related to that, text the word review to 727-263-3707. That's a smart money move. Just text the word review, 727-263-3707, and we'll put you in touch with Mark Haye, 21st Century Financial Group. Mark, couple minutes left. Talk about the book and talk about that review.
Yeah, so the book came out last week, and it's been 3 days. It's #1 new selling book on Amazon, which has been amazing. So thank you, everybody.
Congrats, that's awesome.
If you just go on Amazon and put my name in, Mark P. Haye, there's a lot of Mark Haye, but Mark P. Haye, my book will pop right out. It's just called 0%, and it talks about getting yourself into a 0% tax bracket today in retirement, and what do you got to do. I made it a simple, short read so people can kind of understand it, digest it, talk to me, whatever you want to do. Text me, call me for a review, 727-804-7220. We will not charge you. It's free. It's just, hey, here's what we're doing. Here's what we're trying to accomplish. Are we on the right track?
Yeah.
And some people are, and some people just, if you tweak it here and there, you're perfect.
Yeah.
So what do you got to lose to try?
Right, yeah, just get a review. I always say that, too, when we have our CPA on, Dwayne Bischoff. Like, look, that's with taxes, you can go back 3 years and get a review done. And if you're leaving money on the table, great. If not, hey, at least I know I'm in good shape.
Exactly. And the same thing. I tell people, if you got a CPA, great, but have another one. Every 3 years, just an extra set of eyes on this stuff doesn't hurt.
Yeah.
And like you said, maybe everything's good, but maybe you found 10 grand. Who knows? It just makes a big difference.
Yeah.
Just to have that review. And again,
Exactly.
it's free.
Free review.
We're not going to waste your time. We can do it over the phone. Doesn't matter.
Over the phone, over
Yeah,
Zoom,
doesn't matter. However you want to do it.
Over coffee.
Yeah, you got it. I'll buy you lunch.
There you go.
Give you a free book.
That's awesome. Yep. Free copy of the book. There you go. 0%. Congratulations on the book hitting #1 on Amazon. That's awesome.
I appreciate that.
Are you going to record it, put it on Audible next?
I know. That's the next thing I got to think about doing that.
There you go.
Maybe I'll have you do it since you've done it before.
Oh,
I'll have
there
you read it.
We can do that. We can do that. I'd read mine and just put it on Audible, and it took me like three sittings.
Yeah.
Knocked it out.
Yeah.
So not too bad. Where do you want people to connect with you?
Again, 727-804-7220. You can shoot me a text, and I'll certainly respond to you that day.
Awesome. All right, good stuff. Mark Haye, 21st Century Financial Group, and you can find all of his information online as well as other shows, previous shows, on our website, consumerqb.com, online at consumerqb.com. So check out the book on Amazon. I want to thank Jared Parker as well, Regional Economic Consulting Group, another great guest that we had on the program. Thanks to our producers, Jose, Nicole, Alex, always doing a great job. We want you to please go out there and consider committing a random act of kindness. Do something kind for one another. We'll see you next time. Consumer Quarterback Show, consumerqb.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes. Whether it's real estate, consumer, or financial advice, let Brandon call your next play.